Welcome to the Real Estate Show with Pat Lopez, where we talk everything real estate. For this podcast, we're going to take you to the Real Estate Symposium 2025, where we're going to listen to the panel that we're talking about driving policy and market development. So buckle up. Here we go.
I'm proud to work for an organization that is really consumer-based. Although we don't interact directly with consumers, we're more in the secondary mortgage industry, meaning B2B. But that's why we come to individual organizations and events across the country to make sure that we share our message and partner with real estate professionals that are on the ground, working directly with consumers to help them along their housing journey. From an innovation standpoint, we're building innovative partnerships with organizations like New Kensington Community Development Corporation, Habitat for Humanity, PEA, NARAB, other industries that are really focused on consumers. And so we are working specifically to roll out programs such as HomeReady, which is our flagship 3% down payment program that provides access to many consumers across the country. And so what that does is it allows opportunities for homeowners who otherwise wouldn't have an opportunity to purchase a home to be in the market looking for a home. And that program allows the consumer to double their down payment assistance, which is stackable. I was at an organization yesterday with Neighborhood Live here in Philadelphia. They said, okay, you have programs that we can stack to make sure that we get the most bang for our buck and the most money is available to consumers in the marketplace to make sure that they are not locked out of the housing market. Now, there are other programs that we have directly targeted towards real estate professionals as well. We understand that we have a lot of materials, homebuyer education, but all of those materials and all those good resources were oftentimes scattered or in different places, and most times people couldn't find them. Real estate professionals couldn't find them. So we've organized all of those, put them online, and created a real estate webpage that allows agents and brokers to go to one place to look for all of our programs that focus on consumer lending, down payment assistance, closing cost calculators, agents and renters, prospective buyers who go buy discounted homes, et cetera. So we have a number of opportunities and a number of partnerships and innovations that really meet consumers where they are.
If anybody's doing a conventional loan, you're either doing a Fannie Mae or Freddie Mac loan. Throughout the United States, Fannie Mae is a huge player. And with the HomeReady programs, that does give discounted on mortgage insurance, discount in interest rates. So it's a great product for people.
I just want to say something, take something from Kelvin that I also has in my notes. That is very important in terms of the role that the real estate community has in educating consumers about these programs that are available. As you guys know, many of you have interacted with me, or I have interacted with you by way of the down payment assistance programs that we offer or that we administer in partnership with the City of Philadelphia. I have made it a point. For me, it's very important that you guys are as knowledgeable about these programs as one of the housing agencies or Fannie Mae or the lenders themselves, because ultimately it is you that the consumers will be connecting with. And I love it. I love it when you come to me and you guys get all excited about stacking the programs. And I was having some conversations in the back earlier about how am I going to get to $46,000 from my clients. And that's a testament to the type of impact that these opportunities are having. And some of you are realizing that there is also a great resource to put people in homes. You have a client who's otherwise ready to go, perfect credit score, a good financial profile, but maybe they don't have the assets. And then DPA and other financial assistance will help them get there.
First, good morning, everyone, and thank you, Pat. Thank you, Josh, for having us today. And this is a very important discussion, but I just wanted to first start the discussion by asking how many people know how many homes in Philadelphia County were sold under $350,000, single family? 42 homes, 42 single family homes under $350,000. That was in 2019. How many do you think sold in 2024 under $350,000? I think I heard the right number. What was it? That is correct. So what does that say? It says that number one, we lost 75% of potential affordability for homes under $350,000. We can talk hours about why we've gone there, but over the last 5 years, housing affordability has really taken a dip. And it's taken a dip primarily because of a lot of extra regulations and extra stuff that gets added to us every Thursday, like Matt was just talking earlier today. To give you a simple example, right now, BIA, along with other organizations, are fighting the implementation of the 2021 Energy Code, meaning that we're against energy efficiency? Absolutely not. We are for energy efficiency. But when you implement a code that adds $15,000 per single family home, that the Department of Energy says it's going to save us $142 a year, then there's something wrong, right? That is where the cost and the affordability starts going up. President Obama, quite honestly, is my favorite president. In the DNC, he spoke about how over the last 10, 15 years, we have been adding and adding regulations until it has really come to a point where affordability has become an issue. So the reasons for affordability issues is 1, increased costs. 2, cost of borrowing has been completely different from where it was in 2019. Chris Summers here sold us 150 homes in Kensington. Chris, the average home was what, $377,000. The average mortgage was about $1,400. Today, that same house would run at $2,300, $2,400. The average income for someone that can afford that $377,000 home was making $55,000. Today, that same house has to be afforded by someone that's making $85,000 a year. That's rates. You've got cost increases, you've got rates. The important thing is, what are we doing to combat that? One of the things we try to do is promote programs that actually can really make a difference and make a dent. Now, I spoke about the 42 homes or 45 homes or 42 homes down to 12 homes over the last 5 years. But there's a new program that came out, which gives a $75,000 down payment assistance, right? Now, that's something that a lot of people don't know about. It comes in the form of a second mortgage that gets burns off and turns into a grant if you stay in the home for 15 years for people who are making $81,000 or less per year. So the city has gone through, and we have been a big part of this, pushing this 4 years ago through the 1% construction tax. $400 million in bonds were floated so that we can afford to pay $75,000 for hundreds of people to buy single-family homes, which also Chris Summers' team is doing a lot of selling on. For us, we're building hundreds of them across the city, coupled with a lot of the programs of mortgage companies, $2,000 in common assistance by BOA, by TD, by Citizens Bank, and by all banks that actually have some CRA buckets that end up subsidizing some of these closing costs. We're able to reach affordability. So again, there are programs out there that can help. Turn the Key is a huge concept of 1,000 homes that we're looking with the mayor to increase it to 3,000 homes. I sit with the mayor. I chaired her Planning and Development Business Roundtable, co-chaired her transition team. I chair now Philadelphia Housing Development Corporation, and there is an effort really to get to the affordability to the average Philadelphian that's making $40,000, $45,000, $50,000 a year.
And I'll just say, they just came out, Zillow did a stat of the whole United States, state by state, and you're right. The average amount for Pennsylvania was $84,000 income to be able to afford a home. So that basically is saying you need to be a couple, 2 people to get in the home if you're talking about the average income. Good point. Anybody else want to chime in?
Landlords are keeping the deposits for longer terms, which I think that would be a very small minority that would do that. And therefore, when they go to a new place, they don't have the security. That's not our problem. Okay, if it's going to have the sign up from all of council, let's get the protections in place to do that. One of the other legislations is, as nixed all that legislation that asked for extra requirements to go in and spend another $70 to get a full application. Otherwise, we need to be paid for. We're not looking to make money on application fees. We're just looking to cover the costs. So we're saying it needs to be $75, nothing more, nothing less. Third, you have a legislation that wants to give the authority to the Zoning Board of Adjustments, where you go out there and get variances for projects to be built, giving them the, actually inside the ZBA hearing, to negotiate affordable housing on projects, on developers inside the ZBA room, not on the RCO level. Okay? That's a big no-no. ZBA is there to make sure that you're getting the density, the height, your normal land use issues. No project is going to get approved, and if they get approved, it's going to be approved in a way that it's never going to be built. There's another legislation that we fought back really hard, never came to light, and that was, listen to that, that one's going to be a funny one. You do 100 units by code today, you need to do 5, if you're going to do 100 units and you're going to do 100 parking spots, code tells you have to put 5 spots for EV charging. Make sense? There is 1.5% of the cars in Philadelphia as are electrical vehicles. They require 5. That's great. It's 3 times what we need, but it's good for the future. I'm buying that, no problem. The legislation came out that wants to increase that 5% to 50%. That is of level 2 chargers would add $1 million on a 100-unit job. That's $10,000 per unit. That is the kind of stuff that comes out. You know what we did? We went back. We stopped the legislation, but we went and sat with the council member and we said, I would love to do the 50%. Let's do it. Get us the money to do it. You spend the money to do it. Right? Called the head of the appropriations in the state and said, she said, how much do you need? I said, we need at least $40 million. You're going to have to spend $40 million. To expect that this group is going to come up with the $40 million with the thin margins we're making is absolutely absurd. And that is what's going to happen. We're now trying to get the funding to attach to the bill so that the bill doesn't come out there. That's the kind of stuff, again, if we're not here, the government affairs of BIA, GBCA, the trades not coming together and push back on these legislations, okay, you would see some other stuff. So a lot of people would ask sometimes and say, what have you accomplished over the last year? And no, it's actually 95% of the accomplishment is the stuff that you don't see coming out because it's every Thursday.
Anybody else want, Abraham, did you want to jump in or?
No, but all very valid points. Whenever I mention the eviction diversion program, I always refer to it as the nationally recognized eviction diversion program.
It's a great program, by the way. It's a great program. And we want it to work. And actually, Greg Heller was one of the people that worked on it, and I have ultimate respect, and it helped a lot of families. What's important is that we have to have systems in place where any bad actor, whether it's a landlord or a tenant, has to be protected. At the end of the day, 70% of our landlords are small-scale landlords. They cannot afford 1 or 2 units of their 7-unit portfolio that doesn't pay rent for 6 months. They cannot pay their mortgage. That's the issue.
I think the program came to fruition in the era of rental assistance. So it was always rental assistance and eviction diversion. So from the beginning, the eviction diversion program has had the interest of landlords at stake first. The other thing is the court system. I don't know if any of you have ever been to court. The municipal court is oversubscribed, right? There's some bad actors also that have managed to package the eviction experience in a very interesting way. But also, once we departed from the era of rental assistance, it was important for us that there was some kind of incentive for landlords to participate in the eviction diversion program. So that's why there is a $3,500 plus 2 payments forward that people can receive. If payments, this is the conversation, and this is the way I have that conversation with the city. If money is the issue, then this case does not belong in municipal court. Period. There are other issues that will arise. We have seen it all. The Urban League of Philadelphia has managed more than 2,000 of those cases, right? So I'm involved here, but there are many cases, specifically speaking about payment, that do not belong in court. Someone recently made the argument to me that the landlord has a mortgage. We also do mortgage foreclosure. I can tell you that I'm very effective in keeping people in homes for years before some of my peers, some of the bums in the audience can take their homes, right? Because the mortgage foreclosure process is regulated. This is the judicial state. It's going to take years for someone to take your home in Philadelphia, but we're not providing the same protections for renters, right? So a piece of legislation that is aligned with Pennsylvania's first housing plan, action plan, and something that we have been working on in Philadelphia is the record ceiling, eviction record ceiling. I know that some of you may be familiar with that. Now it's transforming into eviction record ceiling when the tenant prevails in court. Fine, I'll take that, right? But what is happening is there's some software that is coming out often, and it's improving many times through at this point, retrieving information from different systems that is often not accurate, right? So people are being penalized for stuff that happened 10, 15, 8 years ago. No one should be denied housing if they have prevailed in court. And we will continue to advance and mediate, but always looking at both sides of the equation, right? There has to be something for both sides of the conversation on there.
One of the things I just want to add about policy, if you don't mind, is, and this is why I admire our mayor, is behind closed doors and even in the public, she's the same person, right? She's very fierce, she's very strong. And she's not about the optic politics, right? She doesn't want to have that sexy legislation that looks good on the Inquirer on the first page, and then a year down the road, it goes nowhere. What happened 5 years ago, 4 years ago, when everyone was hailing and saying, oh my God, look at that beautiful inclusionary zoning policy that came out in the 3rd and 7th district. 20% of the units of any apartment building has to include 40% AMI units on private land. First of all, I'm an affordable housing provider, so I don't have anything against affordable housing. I'm actually advocating for it. I'm just advocating for it in the right way. 3-4 years, what happened? How many units have been created? Zero. We said it's going to be zero because it doesn't work. Until the legislation got changed and said, you can replace the 40% AMI units with housing choice voucher units, which pays more than market. Then it worked. So it's very important when it comes to legislation. This is where this group sitting on this panel, it's extremely important that we're engaged with City Council, because at the end of the day, a council member has a goal. That goal is very noble, right? I want to bring affordable housing to the people in my community. That's a noble ask. The problem becomes when we draft a legislation that the expertise of the people writing that legislation have never opened up an Excel sheet or did a perform on whether something is going to pencil out or not. And so it passes, and you know what happens the next day? Our good friends in the media, what do? Hail council person for protecting the poor people of the district. Guess what happens? Not one unit gets created. No one talks about it. That is where our job is. Our job is not to resist things that is good for Philly. Our job is to become true social impact organizations. We're recognizing where the issues are in the city of Philadelphia, but actually coming up with a legislation that actually works. The legislation that financially can be financed by banks, by mortgage companies. We are at a crossroads, and these crossroads is that the 10-year tax abatement is gone. Interest rates have doubled, and therefore 80% of the apartment buildings that got built in the last 5 years would never be built ever again. Ever. The only reason they got built was because of these two factors. They're gone. And therefore, we're about to see a true shortage of supply because permits are down by over 75%. Jobs are on hold. Even at land cost of zero, the jobs don't pencil out. And that is where new legislations that promotes density, more height, go up, smaller units, create
an urban environment, an urban land use reform policy that actually creates housing and creates affordable housing.
Okay, so now we're going to go to our last question for the panel. And it goes like this. How is the Mortgage Bankers Association, MBA, and Fannie Mae promoting innovation with mortgage industry? Because there's two parts. You have the realtors and you have the lenders to ensure responsible lending practices. And what new programs, initiatives are you implementing to help expand homeownership that we should be aware of? Wendy, why don't you start?
Thank you. So I want to highlight just a couple of things. Earlier, I mentioned the need to really meet people where they are in terms of their homeownership journey, how they want to go through the process. And a lot of that has to do with changing the method of how we go about collecting information and determining whether or not someone is mortgage ready. So some of the things we're looking at making more useful are things like cash flow underwriting and positive rental payment history as part of the underwriting process. So those are not necessarily new things, but trying to make sure that those processes are more streamlined, that the technology is there to support it, that lenders can implement the kind of technology, that it adheres to whatever might be needed to make sure these mortgages can be sold on the secondary market. But that also speaks to consumers' needs. I don't think fax machines exist anymore, but being able to link to their accounts and that sort of thing. The other part that I'm going to call innovation, even though it's just looking at something in a different way, is collaboration. And Annette did a great job of talking a little bit about Convergence Philadelphia earlier, but that brings together national partners like Fannie Mae, together with local stakeholders like the Urban League of Philadelphia and GPAR, and a bunch of our counseling agencies and others in Philadelphia. And those initiatives are designed to close the information, trust, resource, and market gaps that keep people out of home ownership. But Fannie Mae has been a partner across all of the convergence cities, so Philadelphia, Memphis, and Columbus. But having them sit in these work streams, maybe it's a lending program or maybe it's an education opportunity for real estate professionals and mortgage lenders. But having Fannie Mae at the table with the local partners, that to me is innovative, and it really speaks to what was mentioned earlier about getting into the community and really being a step closer to the consumer. So collaboration is not a new idea, but I think the framework that Convergence brings of bringing together the local and national partners is an innovative step.
What we know at Fannie Mae is that new household formations in the future will totally look different than what they are now and how they've been shaped in the past. And we understand as big as Fannie Mae is and as broad as our reach expands across the United States, we can't do it all by ourselves. And we understand that in order to accomplish our mission and to stay true to our charter and making home ownership and rental opportunities available, we need to partner with local entities and organizations that are on the ground doing the work in the community that are providing hope and access to mortgage products for families who otherwise thought they couldn't afford a home or a safe place to call home. And so partnering with organizations like Wendy's with the MBA Convergence, or working with local organizations like New Kensington Community Development Corporation or organizations in other states and other cities has really allowed Fannie Mae to get a front seat to the action on the ground and really work on programs and innovations that provide access to housing. So I'll just name a couple of those that are really at the forefront of making home ownership and rental opportunities available that I didn't mention. I mentioned HomeReady, our flagship 3% down affordable mortgage product. Wendy mentioned the positive rental payment reporting that allows tenants who have been in their rental leases for a while and have on-time rental payments, for those payments to be counted towards their credit score, which ultimately makes them mortgage ready, helps make them mortgage ready. Additionally, we have our home style renovation loans that allows a homeowner to buy a property and renovate that property in one loan, which further streamlines their application process, but also makes it more affordable for them to combine the construction of rehab and the purchase of their home in one transaction. The next is HomePath. This is a really great opportunity that Fannie Mae has to offer our REO properties to families that otherwise wouldn't have an opportunity to own homes at a much lower discounted rate than what they would find in the marketplace. There are opportunities to do. And then last, what I was mentioning is that we've been traveling the country for a while and really been interacting directly with the consumers outside of our business-to-business relationships. And we've heard directly from the professionals that are providing the services, tell them about how great Fannie Mae is or how great MBA Convergence is, our Urban League or other organizations that are fighting for affordable housing. But if we don't get that information out to the community that needs it, that can consume it, to make decisions about their housing future, then all of the products, all of the tools, all of the widgets that we produce in-house at Fannie Mae will be for naught. So we approach this from a point of humility, knowing that we can't do it alone. We need your help, we need your support, and most importantly, we need your feedback, and we need you to show up and continue to be engaged, because the fight for housing is critical. We already know what the social determinants of health, finances, educational outcomes, etc. are when you don't have a stable home or a roof over your head called home. So we appreciate the partnerships and appreciate you pushing us to be the best version of ourselves that we can be. So thank you so much. Thank you to all the partners, all the presenters, all the organizers for putting on this fabulous forum. And hopefully we can continue to partner for the best interest of our consumers.
I think what I want people, the nugget that you referenced earlier today, and that I want people to walk away with this, from this conversation at least, is as Mo and I, and we get passionate about these subjects because we're in the weeds having these conversations. This is not an exclusive club. Right? You should have these conversations amongst yourselves and with whoever you can influence and with whoever that person can influence, right? In any way, we're representing, at times speaking on behalf of groups of people, right, that share common ideas and common goals. And so that only happens when people communicate with each other. That's all I'm going to say.
Make sure you're engaged with your government affairs committee in whatever organization that you're doing. It is extremely important that you're aware of what's out there. 99% of the people have no idea what's happening in City Hall. It's very important that you do. A lot of stuff gets passed through in days where no one knows anything about, and then it affects and impacts our market. We're not here to resist or trying to prevent council from doing its job. On the contrary, we're trying to make sure that government does its job in the best efficient way, and to use us as a resource. You guys are the expertise when it comes to legislation that affects your business. It's easy to legislate from an office. It is a better job to legislate while engaging with the people who are actually doing the job. Stay engaged, keep engaged, and again, thank you so much for that.
But I also wanted to say that GPAR wants to protect home ownership, but that is also inclusive of investors. So we also want our homeowners to not go into foreclosure. We also don't want landlords and investors to go into foreclosure. So we hope that the city of Philadelphia will recognize it's everyone, and it cannot just be one-sided. So I'm really looking forward with Mo participating and all the other organizations, GPAR participating and making the city of Philadelphia a better place. I think for the first time in my life, I've never seen a mayor provide programming and teamwork to hear the expertise of all of us here on this panel, as well as some of you in the audience, the engagement. And I'm really encouraging the realtors, when you come out, please wear your pins, please participate, come out. Similar to the unions in Philadelphia, they are very well recognized by the city council. And I need us to be recognized on the same level, along with our other real estate partners. So thank you very much, Josh and Pat. This was a great event. And thank you for having GPAR once again participate.
I will use my last minute to give another plug for Convergence Philadelphia. It's a great way, if you're not engaged, to keep up with education opportunities. The goal is not only to educate consumers, but also industry professionals and help build relationships. There was some great programming last year, education and networking events that brought together loan officers, realtors, housing counselors. If you missed out, don't worry, there'll be some opportunities this year. So please follow Convergence Philadelphia on LinkedIn. You can also email convergencephiladelphia@gmail.com. I'm going to say you can probably say hi to Leslie and Michael here today, but it is, collaboration isn't new, but I think the framework of bringing together the local stakeholders along with national partners and resources is innovative. It is critical to have realtors at the table, so I encourage you to participate. Thank you.
Leslie and Michael, we're going to get you on the podcast. We'll talk a little bit more. Perfect. Okay.
Now that's the Real Estate Show with Pat Lopez. Be sure to follow the show on Facebook, Instagram, and subscribe. Super important. I have great guests coming on all the time, great content. Subscribe and give me some likes. It really helps the algorithm out. Also, leave a comment. Tell me some show topics you'd like me to cover in the future. And of course, if there's anything you liked or didn't like, be sure to leave the comment. Super important. We do look at them all. Hope you enjoyed the show, and I'll see you next week.